Want to know how to spot stock market trends like a pro? Imagine being able to predict market moves before they happen. What if I told you it's not as hard as you think? In today's video, we're diving deep into the world of stock market trends and how you can analyze them to make smarter investment decisions. First off, let's break down what we mean by trends. Think of trends as the general direction in which the market or a particular stock is moving. It's like watching the weather. You want to know if it's sunny or stormy, right? When you can read trends, you can better navigate your investment journey. Now, how do we identify these trends? Here are 3 key methods. 1. Moving averages. Picture this. You're on a road trip and you want to see the average speed you've been going. A moving average does just that for stock prices. By calculating the average price over a set period, like 50 days or 200 days, you smooth out the day-to-day fluctuations. This gives you a clearer picture of the stock's overall direction. If the price is above the moving average, it's a good sign the trend is upward. And if it's below, you might want to proceed with caution. 2. Support and resistance levels. Now, let's talk about support and resistance. Imagine you're at a concert and there's a barrier keeping the crowd at bay. The support level acts like that barrier. It's the price level where buying interest is strong enough to prevent the price from falling further. Conversely, resistance is like the ceiling. It's the level where selling interest is strong enough to stop prices from rising. By identifying these levels, you can better predict potential price movements. If a stock breaks through a resistance level, it could signal a new upward trend, while a fall below support might indicate trouble. 3. Volume analysis. Here's where things get really exciting. Volume refers to how many shares are being traded. Imagine you're in a crowded stadium. When the crowd goes wild, it's a sign something big is happening. Similarly, increased trading volume during a price move indicates strength in that trend. If a stock's price rises with high volume, that's a strong bullish signal. But if the price rises with low volume, it might just be a temporary spike. Now, you might be wondering about the emotional side of investing. It's easy to get caught up in the hype or panic when prices fluctuate. But remember, analyzing trends gives you a roadmap. It helps you stay grounded and make informed decisions instead of reacting emotionally. Let's bring this to life with a relatable example. Imagine you invested in a tech stock that's been on a steady rise for the past 6 months. You notice that every time it dips to a support level, it bounces back stronger. By observing this trend, you can confidently hold onto your investment, knowing it has the potential for future growth. But what if you see a stock that's consistently hitting resistance? You might think twice about investing further, especially if your financial goals are more conservative. It's all about aligning your investments with your risk tolerance and time horizon. If you're planning for retirement in 30 years, you might be more willing to ride out those bumps than someone who needs their money in a few years. As we wrap up, let's recap the key takeaways. First, use moving averages to understand overall stock direction. Second, identify support and resistance levels to gauge price movements. And lastly, pay attention to trading volume. It's your indicator of strength behind the trend. Are you ready to dive into the world of stock market trends? Comment below with your thoughts. What trend are you keeping an eye on? And if you found this video helpful, don't forget to like and share it with your friends. Before we go, here's a teaser for our next video. We'll be uncovering a little-known investment strategy that could change the way you look at your portfolio. You won't want to miss it. Until next time, keep analyzing, stay informed, and happy investing.